Hi, this is Brien Lundin of Gold Newsletter, here with your Market 1 Minute. I'm here with the irrepressible Peter Schiff. Peter, you boldly predicted the credit crisis, the housing bubble, the credit crisis of 2008. Aren't you really relieved now that we've wrung all the excesses out of the system and we have clear sailing ahead and QE is finally coming to an end with no repercussions in the broader markets and economy?
Yeah, I really wish that were the case. I really wish that we learned our lesson, from all the mistakes that we made to inflate that bubble and that caused the '08 financial crisis. Unfortunately, we didn't. We did everything wrong again. We repeated all the mistakes, only grander, and unfortunately, the financial crisis that's in our future is much worse than the one in our past because the U.S. economy is more screwed up now than ever before. It's not the disease that we had that's going to destroy the economy, it's the Fed's cure. And the irony of it is they infected us with the disease in the first place, and now their cure is going to kill us.
Well, recently we saw just extreme volatility in the U.S. stock market. I mean, by using the VIX as a measure, the market went from complacency to panic, back to complacency in 3 days. And it's amazing to me that the market was moving so quickly, it didn't take much to trip it up, but then it went right back to complacency. Where did that come from?
Well, it can't, look, this is like what happens when, a drug addict isn't going to get his drugs. He might start to go through convulsions, if he's not going to get what he needs. And the market has been hyped up on, the Fed's monetary heroin, and the idea that it's going to end, that there's going to be no more QE, and that rates are going to rise, the stock market's coming down. It wasn't until the Fed came out, you had Bullard come out and said, wait a minute, we may pause the taper, and we may give you more drugs after all, and then everybody was happy because they think they're going to get another fix.
And at the same time, you had the Bank of England, the ECB all came out with statements saying that they were going to ease or maintain low rates, and you had the Bank of China saying that they were going to put out $36 billion into 20 banks, all coincidentally at the same time, and the